This is The Tea Project with your host, Gadiel and Michelle, a husband and wife duo where they will be discussing personal finance, managing a household, and so much more. Gadiel is a father, husband, a military veteran, and a lawyer. Michelle is a mother, wife, boss. Each week, they will be providing you with fresh and valuable content, so stay tuned. And now, welcome to The Tea Project.
Hello, folks. We are back on Tea Project Money Talks, and this is Michelle and Gadiel.
Hey,
and
folks.
Today we're going to talk about a little bit of finance.
Let's talk about some finances. Now, Michelle's taking lead here. Okay, she's a financial guru. I depend on her. If God forbid something happened to her, folks, I really don't know what the heck I'm going to do, folks. But
oh, please.
I really don't. Maybe I'll go with her. I'll say, hold on, don't go yet. Let me go with you. And anyhow, so it's a joke there slash some truth there. But anyhow, so talk to us.
All right. So I was looking at an article from MarketWatch on MSN, and the title is "Some Wealthy Americans Are Already Prepping Their Finances for a Joe Biden Presidency. Here's how." So kind of we're looking through it and looking at what are we facing if we are in Biden's world.
Right.
So,
let me set up the article here. So basically, it talks about an accounting firm in San Francisco who is already preparing their clients in case because Biden already has his tax proposal out, right? So you can go Google it, boom, you'll see it up, and if he wins, you have his tax plan. Whether he implemented it or not, who knows? But it's there. So this accountant in San Francisco is taking no chances. He's saying, listen, client, if Biden wins the election, your capital gains tax will go from what it is now, 23.8% to 39.6%. Man, that's almost double.
All right. But one thing that we need to preface this with is that depending on who our listeners are, which I don't know that we know entirely yet.
Right.
Especially because we're just starting off.
Yeah.
This is going to affect the higher income, the 1% earners.
Yes.
Like the top 1%. Not really. It wouldn't affect us. But it still gives you
insight. I think.
Which I think it's important to know.
Yeah.
It may not affect you. I think some people think of it as, the more you tax, the more programs there'll be, the more, the more we'll get to trickle down to us.
Right.
I don't know. But I think at the very least, you need to be educated.
Yeah, you know what? And not only that, it's a good point. Is you say, look, what we're about to talk about now, Biden's tax plan, it may not affect you. It's not like Michelle said, it's not going to affect us. We don't make that much. God, I mean, we want it. Hey, please, let's make that much where it can affect us. The tax plan.
If we made, I would say make up to that amount.
Yeah.
So that we don't get get taxed. Yeah.
But the point is this. And the way we look at it is this. We need to look. We are not making as much as some of these big top earners are. But you know what? Why don't we learn from their money moves? Right. And I think that's the point of what we're making.
That's the point of this.
If they're making their moves based on this tax plan, hey, we need to do the same thing. Obviously, on a smaller scale.
It's a foundational thing. Like just being educated. That's it. If you ever find yourself, hopefully, being in the top 1% earner, then
great. You're prepared.
This is your start.
Right. So I think the same way. I think, look, if they're making their moves, we need to make it too. The stock market doesn't only affect rich people; it affects all people.
Right.
So, okay. So, like I said, this accountant is reaching out to their clients out in San Francisco, saying, "Hey, there's a Biden tax plan. If he gets elected, this is how it's going to impact you." So, the capital gains tax rate is going from 23.8 to 39.6 on capital gains. This particular client that this article is based on saved this guy $320,000 in taxes on a $6 million sale of an asset that he was doing. Something that he could have done, according to the article, he could have sold the asset over a 3-year period. However, the election is November 3rd. they didn't want to take the risk of losing $320,000 in taxes, and based on who was going to win or not. They said, no, we need to make this sale happen now as opposed to stretching it out over 3 years, because I'm not going to pay $320,000. I'm keeping that. So that's what they did. That was the point, really the point of this article. And it's also an outlook of, if this one client is doing this, how many other people, are doing the same thing, preparing for who ultimately becomes the president after November 3rd. We need to prepare now.
Right.
Michelle?
Right, I agree. I'm also reading on here that if it says here, one Illinois financial planning firm has carried out approximately 50 Roth IRA conversions this year with an eye on the election. Now, this financial planning firm I'm assuming that the reason they're doing this is because they're probably thinking Biden will take the election. So in converting the IRA, means that I'm assuming this is for people who are going to retire soon. Mm-hmm. Or it could be for even people our age, because if you think about it, converting to a Roth IRA, the good thing about the Roth IRA is that you pay the taxes now at a lower rate, right, as opposed to paying at a higher tax rate with a traditional IRA
when you withdraw
once you're ready to retire.
Right.
So whoever's converting, I'm assuming, could be somebody who's close to retiring in the next 4 to 8 years.
Yeah.
Because then that means that if they're going to retire within those 4 to 8 years, they're going to be looking at paying 40% taxes. Mm-hmm, mm-hmm. So that's interesting that they put that there. I wouldn't convert mine just yet.
Yeah.
I'm not retiring anytime soon.
Right. We're still working for another good 30 years. Hopefully.
Now, I would in pieces, though.
Okay.
I would in pieces, because if you put it, you don't want to go over. We have our student loans, and we don't want to show too much income, because that's where our student loan will go. Our payments will go up higher. But I can see the possibility is that these are people who are retiring in the next 4 to 8 years, and that's why they're doing that.
Right. So there's a lot of people right now, a lot of service industry companies, service providers, that are really taking a hard look at what could come and basically telling their clients, you need to prepare regardless who wins, because taxes, the tax, plans, or the current tax code, some of that stuff will change based on who's on the White House,
So let's see here. It says, the flurry in planning comes at a time when income inequality is more dramatic than any time in the past 50 years. The coronavirus pandemic, it is feared, could further deepen the gulf between the rich and poor. Biden says his tax plan would make sure corporations and wealthy Americans pay their fair share.
Right.
I mean, like I said, in reading this, this is for the top 1%. Mm-hmm. And from what I'm looking at here, the top 1% earners would be the ones that are paying 80% of that tax bill.
Yeah. Or
that tax bump. So, but it's good to look at it. Like I said, it's something that,
it's something that you really got to consider, regardless on where you're at within the tax bracket. Let me mention this. The same article talks about estate planning, and that's an area that I do. I don't deal on the tax side, but I do the estate planning, and I work in conjunction with the person's tax preparer, like whoever their tax professional is, who's been doing their taxes. I communicate with them, and at the end we end up creating the best instrument for the client, estate planning instrument for the client. But this article says, look. Estate planning. Americans will inherit around $765 billion this year in gifts, and that sum will generate around $16 billion in taxes, right? And this is according to New York University Law School professor. all right, who says that's barely 2% effective tax rate. So estate planning is another thing, like depending on, and I think everybody should have a basic estate plan. We just did a podcast episode on estate plan, that my personal opinion, forget legal, personal opinion is that everybody should have an estate plan, more so if you have children, right? Or you have assets, anything titled in your name, regardless if you have debt attached to the asset. The purpose is you need to have a written instruction on who is going to inherit that asset, right? So forget about, not forget about, but aside from the estate tax implication of your estate planning, you need to have one. But even in the estate planning world now, a lot of estate planners, financial planners are taking this year's election, I don't know, they're taking it more serious than any other year, it seems like. According to the article you read, 50 years. They're taking it very serious.
Here's something else they're saying about it. That Biden also wants the rich to pay more into Social Security. So Social Security, we've been looking at how Trump had said that he was going to take some of that money from the general fund,
right, to fund Social Security, as opposed to payroll tax.
Correct.
And look, this is a big topic when it comes to both Republican and Democrat, both parties, where Social Security is like one of the talking points. Oh, he's going to defund Social Security. We're not going to be able to retire. We're not going to have money there. So the Republican Trump is saying no. It's not that because he's freezing payroll tax right now, where you don't have to pay, the employer doesn't have to pay payroll tax until next year. Why? Because he wants to pass on that taxable income to give the employee extra cash flow.
Right.
Not that you don't have to pay it. You're going to have to pay it next year, but you need the money today, right?
Right. And since we're on that topic, I think we're already in that time frame.
Yeah.
When did it start? Was it back in the beginning of September?
Yeah, recently. Yeah.
So, and we had this conversation before.
We had
should people have it? Should they not have it? Did we take advantage of that?
Your company.
Our company didn't even entertain it, which is fine because I would have said no to it.
Yeah.
The truth of the matter is, if I have income coming in, I'm going to just continue with the flow.
Right.
Now, if I had an emergency, then yes, but the company isn't participating, then you can't either.
Then you don't even have the option. So the way I understand is that the payroll tax freeze is that the employer first the employer says, will I
defer?
Will I defer paying payroll taxes? I'm not even considering the employee at this point. Will I do it? Why? Because in the end, whether the employee continues working or just
that's a whole other thing too.
They have to pay those payroll tax.
Right.
Even if they defer, they have to pay those.
Right.
Who's left holding the bag? The employer. So your employer didn't even consider that.
Right.
Look, I think if your employer does entertain freezing it, you still have your right to say, look, I'm still going to pay, payroll tax.
Right.
I still want my payroll tax paid. I don't need the extra cash flow. Continue doing it. I don't want to pay twice because you still got to pay because it's frozen until January 1st, right?
Right.
And then you got to pay, come January, you got to pay those payroll taxes and what you owe.
Now, if you did participate in it,
okay.
I think you just have to budget for that.
You got to budget for it.
You have to budget for it.
You got to budget paying twice.
Right.
You got to budget for it. But if you need the cash and you're able to do that, do it.
Yeah.
But budget for it.
Right.
Budget for it.
And if you can budget for it, I mean, it's an emergency, use it. You know what I mean? It just take it for what it's worth. It would be making sure that you're making a informed decision, knowing that it is deferred.
Right.
That's it.
And I'll add to that. If we did that, we have to take the onus or the responsibility on us how we manage that.
Right.
I can't put that on no one else. So that's Social Security.
So he says here he also wants the rich to pay more into Social Security. Employers and employees currently pay a combined 12.4% in payroll taxes on the first $137,700 an employee earns.
Yeah.
So his proposal is to restart the payroll taxation still at the 12.4%, but at the $400,001 mark.
Right.
So I mean that may not be bad. That's actually good.
The majority of folks don't make $400,000 a year.
Right.
Majority of families don't make $400,000 a year. So we're only talking about the top earners.
Right.
Now,
it says here capital gains rates are another consideration. Biden would raise the capital gains to 40%, making it at least for people making at least $1 million.
Yeah.
That would go up from 23.8. So that's interesting because now that we know that it's $1 million, in the current situation that we're in, it's a transfer of wealth that's occurring.
It's a transfer of wealth, yeah.
So if for those who are taking opportunity of this, this current situation that we're in, and they're making, the best out of it financially. The first $1 million that you make, that's it, bam, you're at 40%.
Right.
And you're just starting off.
Right.
So that's a little bit of you kind of had me there with the 12.4 and the 400,000. Oh, that's great. From 137 to 400,000, that's more than a 200% increase. But now I look at this at the 1 million mark. People are going to make 1 million. People who weren't making $1 million last year and made $1 million because they started up a business, a successful business.
Yeah.
If they made their first $1 million, then
they're gonna fall into this.
Right. Now, granted, this I'm assuming is 1 million net after any.
Yeah. Yeah.
So maybe it might not. I guess for those who make 2 million, maybe. I don't know, but it's just something to have in your. Let me also
add this. In the same article, it talks about audits, IRS's audits, right? So I know we were always like, hey, we gotta be, we have to keep records of these business expenses, that, and we need to go throughout the year doing tax planning, right? So when it comes to file our taxes, we're prepared. We're not like, oh my God, what did we spend here and where's that the proof of receipt and this and that. So we go throughout the year tax planning and packing our tax file, right? To give to Chris. But here it says the 2020 presidential campaign comes with an increasingly short-staffed Internal Revenue Service auditing, where the agency data shows that the IRS is going to audit around 1.73 million returns. That's 1% of all returns.
Wow.
1%.
Well, we had a tax amendment. We're still waiting for it.
Oh yeah, that's interesting. That's funny. So I forgot what the amendment. That was for 2 years ago. Not this tax return.
The one before.
The one before that. We had amended for whatever reason, and we have yet to receive.
Now, put on your legal hat. What can we do in that case?
Honestly, I mean, I could go do something, but it's so exhausting. That I mean, I could. Oh man, it's daunting. Because I don't know, I mean, when's the last time you called the IRS to do anything?
Never, because you do that.
It's like to get a hold of the IRS on the phone, oh my God, it's like calling Social Security Administration. You'll be on hold forever, and everything is done via mail, like responses. You don't get nothing tangible on the phone. So it's daunting. It's daunting, which is why I really haven't put any pressure on the IRS to finalize our amended return for 2018, and if they owe us something, pay us. Whew. Just thinking about it is daunting. But 1% of all returns, auditing 1%, boy, that's crazy. That's crazy. That means, a lot of folks are going to be filing things.
What was it? What was it before again? What was
it was 1.5. Now it's Now it's
down?
5%. Yeah.
And then here it says that figures like former Treasury Secretary Lawrence Summers, a Biden campaign advisor, says that the IRS could reap an extra $535 billion if it brought audit rates back. So that's what they're looking for, to staff
I mean, they have to staff
the IRS for it.
Yeah, no, they have to staff. Look, people are still, I imagine, I mean, I haven't really dug deep into it, but...
On the high net worth individuals.
But the IRS was completely, unprepared for the stimulus checks. There's folks still waiting for checks. You know what I mean? Mm-hmm. Because everybody, the U.S.
Now, do they pay? They should be paying interest on.
They pay interest on your return. On your return. So
because have we gotten?
Yeah, we got an interest check.
But it's not consistent though, or is it every quarter?
It was one time. It was interest
here we feel like
on the return that we got for 2019. Uh-huh. We didn't get it until, usually we get it within a couple weeks or whatever, 2 weeks. We waited a few months, and then they gave us the check, right? And then we received recently, maybe a month ago, a deposit in our operating account for like $18, something like that. And it was the interest on the refund that they held past the deadline of when they're supposed to give you the refund.
Wow.
So.
Well, I think that's.
So in sum, what do you want the folks to really get out of this podcast?
Well, I think what they're saying here is they recommend that you do your tax planning now, not after the election.
Right.
Because by then it's too late for whatever reason. But if you are in that tax bracket, and you're not doing something about it, you should be.
Jump on it. Yeah. And let me add this though, because I think even if you're not in that tax bracket, I think you need to be doing tax planning every year throughout the year.
Yep.
What does Kiyosaki say about taxes?
To look for ways to pay the least. Yeah.
And unfortunately, that's what it is.
It's legal.
It's legal. You're not doing nothing illegal. You're doing ways to pay less tax.
Right.
So there's the 4 quadrant that he has, and I'm not going to get too detailed because this podcast is not in that. But the quadrant it's broken down into employer, independent contractor, business, investor, and then the investor is the one who pays the least amount in income tax. So what I'm telling you guys is that regardless of where you're at in that little spectrum, in the 4 quadrant, you need to look ways on how to pay less tax. And there's different ways to do it, whether it's investing or whether it's the deductions or it's this or that. You need to figure out the tax game to prepare to pay less tax when you file your return. Everybody should do that. And it's not you trying to escape paying your share. No, you're paying your share. But you're only paying your share. And that's based on your preparing throughout the year. Yeah, don't pay more than you have to, man. That money can go into your family. That can go into your child's education. That can go into your business if you're an entrepreneur. That can go into many things that also affect your local community because you're investing that money and you're not spending it. And if you are spending it, you're spending it in your local economy.
Right.
So, any final remarks?
Nope. That's all
folks,
we got for now.
Please give us a thumbs up. Subscribe, hit the bell.
Let us know your thoughts.
Let us know if you're preparing. What if you're like, forget you, I'm not preparing jack. Well, then that's great too. But let us know either way. All right. So take care. God bless.
Till next time.